Hello, private lenders. Welcome to another video from REI Funding Partners. Today's topic is focused on risk management in private lending and what our strategy is around that. As a private lender, risk management is a top priority. So let's jump in and take a look. Hopefully you can learn some things that will be helpful for you here. We divide our strategy for risk management into 4 tiers. The first is making sure that we have a professional team in place to handle getting loans to closing and then managing the portfolio. Next, our tier 2 is that each of the projects that we fund will meet or exceed our risk metrics. Tier 3 is to fund projects that are local to our area here in the Southeast. And then tier 4, our risk management table. So let's jump in and I'll explain each one of these to you. So first, it's important to us to have a professional team of people that are bringing the deals in, that are getting them ready for closing, getting the closing complete, and then having the draws managed and having the servicing done afterwards. So here's how we do that. First, the principals in the company are experienced in real estate and private lending. So I'm one of the founders of the company, over 18 years of real estate investing experience there. So that experience means a lot. We've been around, we've seen some things. Then in our marketing and sales, we have an experienced real estate investor there on the front end that understands not only the private lending side and the deal structure, the loan to value metrics and important things like that, but also they understand a purchase and renovation project because of hands-on experience. Very valuable. Then when we get into our operations, we have an experienced rehabber and property manager that's over the operations department and a experienced closing agent that does our processing and for the draws and for the loan processing. So a lot of experience there on getting loans to close, on checking title, on insurance, on all the underwriting steps that we do along the way to make sure that the borrower and the real estate itself are qualified. And then finally, in our finance department, our finance manager has a bachelor's degree in business administration for professional accounting, and she understands very well how to manage the transactions and the cash flow. And there's a lot of payments in and out that we do here. And so managing that, and then company budgets and all the metrics that we look at internally, all handled by someone with a deep education in that content. So again, we highly value having a professional team to do the loans that we do. Tier 2, the risk metrics. Let's talk about that for a moment. So loan to value is one of the most important metrics for a private lender. Banks will typically lend up to 80%, and if they're doing an FHA loan, they may go to over 90% on that. So we stay on the conservative side with that of 70% or less on loan to value. Very often we're 65% or less. So loan to value is one of the important metrics that we follow. The borrower's experience, we want them to have a track record of at least 3 successful deals or other compatible experience. Some borrowers come to us and they've been the contractor doing renovation projects for other people, and they know very well how to do that side of the project, how to take a house that doesn't look very good and make it look great. And so we can help them out with the valuation of the property and the things that maybe they're not so experienced in yet, if they do have the necessary compatible experience. And finally, cash reserves are important. It's one of our risk measurements here. So the borrowers have to show 3 months of cash reserves on hand, as well as having the cash for the down payment in the property. So that's tier 2. Tier 3, being relatively local with our deals. So staying in the Southeast. We're based in Tuscaloosa, Alabama. That's right here. Some of the cities that we lend in are highlighted: Birmingham and Mobile. We also do some Montgomery and Huntsville projects, and our local area of Tuscaloosa. The other highlighted ones are areas that we would be willing to go to with a good team on the ground there, because these are other large metro areas within this radius. So we find that doing deals in our area, we like it for one reason, because it's been historically kind of steady and stable, not a lot of volatile up and down in our region. Here, we're within less than a 4-hour drive from these cities, so we can go and meet people and establish a local presence in those areas. And we just prefer this strategy to going nationwide. We feel that there's an abundance of deals and customers to be served in these areas, and that's what we like. Next, I'm not going to go over this in detail for keeping the video a reasonable length. But I'm going to show you, actually the details are on the next page, but here I'm going to talk about what you can think through as you pause maybe and look at the things on the next slide on the actual table. This is telling you how the table is built. So we identify a risk event, something that could happen on one of our projects that could go wrong. Then we ask the question, what's our plan to mitigate and help reduce the possibility of that risk happening? Or if it did happen, how can we minimize the results? Preferably, we would like to avoid. So how can we underwrite and do all the upfront work to keep a specific risk from happening? And then transfer. Our loans are structured to be able to shift the risk away from us as the lender, any risk that may be there. And then finally, contingency. What happens if that risk does occur? What do we do in that situation? So these are the thoughts that go into the table that you're going to see on the next slide. And it really helps. It helped to think through all of that, to build our answers out for that table and implement those things into our policies and procedures here. So here is that risk management table that I mentioned. And again, this could turn into a pretty long video if I went into detail on all of these. But you can pause the video, you can stop, you can look at these and see these are all the main things that could potentially happen with a private lending project that's secured by real estate, and then how we choose to mitigate, and then a contingency plan for what if. So many of these we have never seen happen. We have seen some issues with title, and we do get title insurance on that. So we've not had anything that couldn't get worked out that we actually had to go to a claim on. We've had borrowers that stopped paying before. We have had other borrower investors that would step in, purchase the property, and finish it out. We've also had, in a couple of cases out of our 400 plus loans, where the borrower stopped paying, they couldn't finish the project, and they deeded it back to us to move things forward. So to date, we haven't had to foreclose on a property, but at some point that's probably going to happen, just because that's the business that we're in. But other than that, we have had one fire damage property, and the insurance paid off on that. We have had a property that was damaged by tornado, and the insurance paid off on that. So some of these things do happen, and thankfully the contingency plans have worked to help take care of us. So again, I would encourage you to pause, read through those things on yourself, see if you have any questions. If you do on any of these slides, if you have other things that you're doing as a private lender to mitigate risk, would love to see that in the content. If you have questions about some of the things that I've covered here, or even on this chart here, would love to see those things in the comments. We'll address those, and always glad to share knowledge and to learn as well. We've been at this for a lot of years. There's a lot of things that we know and we've experienced, pitfalls that we want to help other private lenders avoid, but we're still learning and growing and improving our processes as well. So if you have something, we'd love to hear it. That's it for today's video. We do have a growing library of videos on YouTube. We'd love for you to like any video on there that is interesting to you. Subscribe to our channel, follow us, and we'll keep putting out content that will be helpful for you as private lenders. Until next time, take care and God bless.